be honest, a couple of weeks ago, I was pretty positive about the Bitcoin super cycle. But right now, given all the FUD and all the emotions that was stirred up in the community, I'm less confident about it now. That's to be very frank, because the more FUD you kick up and the more you get all the community right up, it does have negative effects. And also, basically right now, I think we're living in a very turbulent time globally.
Yes.
Globally, geopolitically, etc. It's very hard to predict what's going to happen next.
Yes.
Right. So I think fundamentally, there's going to be very high volatility.
How's it going, everyone? Welcome back to Black Room Trade. We just witnessed one of the most aggressive reset of the year, and this isn't just a dip, it is a complete market structure reset. Again, the setup is a little bit different today. We're officially kicking off the WEEX AI WAR Europe trip, and we're at our first stop here in London. The weather is, it's London. Pretty gloomy and gray, but honestly, it matches the mood in the market right now perfectly. While we're flying over, Bitcoin decided to fall off a cliff, tapping that 59.9K level, and we're seeing panic, we're seeing massive liquidations number, and sentiments has flipped to extreme fear overnight. But again, the stories today are too big to skip. We need to talk about why this flush happened, the truth about the ETF outflow, and why some massive on-chain move from Marathon Digital might be the signal we've been waiting for. So let's start with the immediate question. Is the bull run over, or did the market just hand us a gift? First, let's take a look at the damage. Bitcoin dropped to 59.9, and when price moved that fast, it usually means one thing: leverage is getting wiped out. So for those who's new to this, leverage is borrowed money. Traders were so confident that the price would only go up, they borrowed millions to bet on it. When the price dipped even a little bit, the exchange forces them to sell to cover their debt. Now let's look at the data. This is the open interest on Bitcoin. It collapsed from $5 billion to $3.6 billion. That is a massive amount of foam being blown off the top of the beer. In total, we saw $1.35 billion in liquidations. That is a pretty big move. Again, this is a classic behavior in fearful market. When everyone stands on one side of the boat, it inevitably tips over. But here's the key takeaway. This wasn't mostly driven by people selling their actual Bitcoin because they don't believe in it. This was actually driven by a lot of gamblers getting kicked out of their casino. That distinction matters a lot because spot selling is when people leave the market and leverage flushing is just a reset button. And right now, that button has been smashed. Now, adding to this anxiety, I've seen a lot of headlines screaming about the ETFs. Now, $272 million in outflow, and people are screaming that the institution's money is leaving. Now, that is simply not true because we need to look at the context. 272 million sounds like a lot to you and me, but in the grand scheme of Bitcoin's daily volume, it's a drop in the bucket. Now, the bank sees the writing on the wall. They aren't panic selling everything. This outflow data often lags, and it represents a very specific type of rebalancing. If you stop looking at the price action and start looking at the infrastructure, the picture hasn't changed. Now, this week, we also saw something interesting on-chain. Marathon Digital, one of the largest Bitcoin miner, moved 1,318 Bitcoin. When miner move coins, it usually signals they need cash, maybe to upgrade equipment or pay bills. And this is going to add to the selling pressure, and it scares people. At the same time, we're hearing rumors, and right now they're just rumors, that Tether is looking to raise or inject another $20 billion in liquidity. Now, the reason why this matters is because stable coins are the fuel for crypto market. If Tether prints more USDT, the money has to go somewhere. And historically, it flows into Bitcoin. So on one hand, you have miners selling to cover costs, that's the bearish pressure, and on the other hand, you have potential massive liquidity waiting on the sideline. It's not just about number go up, it's about money migrating. The miners are upgrading for the future, and the stablecoin issuers are preparing for the next leg up. Now that tells me the infrastructure is still being built for a higher price, even if the price today looks really ugly. Now, if you want a confirmation that investors are nervous, look at the fear greed index. We're sitting at 9, single digits. This is extreme fear that we're talking about. And the last time we were in this low was at the bottom of the bear market. Now, I believe that this is about survival for the average trader. So your brain is screaming at you to sell everything and run away. But historically, buying when the index is below 10 has been one of the best strategies you could possibly have. Now, that could be your signal. The market structure has broken down in short term. And yes, we lost the support bands, but we're hitting areas of deep value. The leverage is gone and the weekends have sold. The tourists have left the building, and who's left? You and I are. And maybe, just maybe, the institutions are quietly scooping up that cheap Bitcoin on Coinbase while everyone else panics. So here's the takeaway. We flushed to 59.9 and we wiped out over $1 billion in leverage. And the sentiment is as bad as it gets. But if you zoom out, the thesis hasn't really changed. The money is migrating from one old system to a new one. This volatility is the price of admission, and I'm going to be keeping a close eye on the level while I'm here in Europe. Now, we got a lot more coming from the WEEX AI WAR Tour, so stay tuned for that. So if you have any questions about this crash, drop them in the comments. I'll read as many as I can, and make sure you like and subscribe so you don't miss the next update from London. And I'll see you in the next one.